Hello everyone, John AG here. Welcome back to my channel, Aurex. If you haven't yet subscribed to my channel, in this channel you will find the real information, real market updates that everyone cannot tell you. So please subscribe this channel and love you all of my subscribers for your support. And please watch this video till the very end because YouTube will not push my videos to more people. Have you looked at your grocery receipt lately? Have you looked at the cost of electricity, the price of fuel, or the spiraling numbers on your insurance premiums? We are standing in the middle of the year 2026. And the world as we once knew it, the era of cheap credit, stable prices, and geopolitical harmony, has completely evaporated. What is replacing it is a financial landscape so volatile, so unforgiving, that a single misstep today could literally cost your family their generational future. What you are about to hear is not a standard financial broadcast. This is a survival manual for the modern economic era. Right now, as we speak, gold is violently trading near $4,600 an ounce. Silver has shattered its historical ceilings, blasting past $84 an ounce. We are witnessing a historic tectonic shift in global wealth. The BRICS nations have accelerated their de-dollarization mandates. The global supply chains are fracturing under the weight of geopolitical conflicts, from the choke points in the Middle East to the technological Cold Wars in the East. Central banks are hoarding physical bullion at a pace we have not seen since the collapse of the Bretton Woods system in 1971. They know exactly what is coming. They are quietly and methodically exiting the fiat currency experiment. But out here on Main Street, a tragedy is unfolding. Everyday people, hardworking men and women who have spent decades trading their blood, sweat, and finite time on this earth for a currency that is actively melting in their hands, are waking up to this reality. They are feeling the terrifying, visceral erosion of their purchasing power. And in their desperation to protect their families, they are rushing headfirst into the precious metals market out of pure, unadulterated fear. Because they are acting on panic rather than precision, they are walking blindly into traps. They are making catastrophic, wealth-destroying errors that the institutions are mathematically counting on them to make. Today, we are going to tear back the curtain on the 5 biggest mistakes people make when buying gold and silver. I need you to lock out the distractions for the next few minutes. The stakes have never been higher. The first major trap is deeply rooted in human biology and market psychology. It is the psychological vulnerability of chasing the headline instead of understanding the structural trend. In the financial markets, this is often called the fear of missing out. But in the metals market, it is far more insidious than simple FOMO. When gold broke past $4,000 earlier this year, a massive psychological switch flipped in the minds of millions of retail investors. People who had completely ignored precious metals for a decade. People who laughed at the idea of owning physical gold while they chased tech stocks and digital illusions suddenly panicked. They looked at their savings accounts, realizing that a yielding interest rate of 4 or 5% is an absolute joke when true on-the-ground inflation is silently taxing them at double digits. The purchasing power of their life savings was evaporating before their eyes. So what did they do? They threw their hard-earned money at gold at the absolute highest, most euphoric peaks of January 2026. They bought the top. They bought the hype generated by mainstream media anchors who only talk about an asset when it is already at its apex. And what happens every single time retail investors panic buy a peak? The market breathes. The market always breathes. Gold pulled back slightly. It consolidated its gains, dropping a few $100s to establish a new structural floor. And the moment that happened, those emotional buyers felt a crushing wave of buyer's remorse. Terrified that the top was in, terrified that they had been fooled, many of them sold their positions at a steep loss, running right back into the burning building of fiat currency. You must understand this fundamental truth. You do not buy gold and silver to get rich by next Tuesday. You do not buy precious metals to trade for short-term fiat gains. You buy precious metals to become your own central bank. If you are buying right now, you cannot look at a daily chart and let it dictate your heart rate. You are not buying a digit on a screen, you are buying financial insurance against a systemic, unpayable global debt crisis. We are looking at a United States government that is rolling over trillions of dollars of debt at aggressively high interest rates. The interest payments on the national debt have now eclipsed the entire defense budget. The macroeconomic conditions of elevated deficit spending and currency debasement are structurally, irreversibly baked into the system. You must learn to buy the trend, not the spike. You accumulate steadily, consistently, with the cold, calculating, emotionless discipline of a sovereign institution. Do not let panic dictate your entry point. When the price dips, you do not sell in fear. You recognize the dip as a localized discount in a macro bull market, and you acquire more ounces. This brings us directly to a pitfall that genuinely breaks my heart because it preys specifically on honest, hardworking people who are simply trying to do the right thing. It is the trap of buying the wrong product. It is the seductive, predatory world of high premium numismatics and so called rare collectibles. Let me paint a very common, very dangerous picture for you. You realize the banking system is fragile. You decide it is time to protect a portion of your wealth, so you call a heavily advertised precious metals dealer. The person on the other end of the phone is incredibly polite. They have a velvet voice. They listen to your fears about the economy, they validate your concerns about inflation, and they build a deep sense of trust. Then, the pivot happens. They tell you that standard bullion is fine for the average person, but because you are a smart investor, because you want something that is confiscation proof or historically significant, you need to buy their exclusive, graded, semi-numismatic coins. They tell you a captivating romantic story about a 19th century shipwreck, or a limited mintage, or a specific historical era that makes this particular piece of metal utterly unique. What they conveniently leave out of that beautiful story is the brutal mathematics of the transaction. They do not tell you that they are charging you a 30, 40, or even 50% premium over the actual spot price of the metal contained in that coin. If you are buying precious metals to protect your family from an economic collapse or hyperinflation, your singular overriding objective is to acquire the maximum possible weight of gold and silver for the absolute lowest possible price. Period. Weight is the only metric that matters when the fiat system fails. Every single dollar you spend on a collector's premium is a dollar that vanishes into thin air the exact second you sign the receipt. If you suffer a medical emergency, or if the economy locks up and you need to liquidate your assets to survive, the secondary market does not care about the beautiful wooden presentation box your coin arrived in. A bullion dealer buying it back from you will weigh it, verify the purity, and pay you the melt value based on the current spot price. If you paid a 40% premium to acquire that asset, the price of gold has to rise 40% just for you to break even on the transaction. You start your investment deeply in the red. Do not let a smooth-talking salesman steal your ounces by selling you a story. Stick to the absolute basics. Buy low-premium sovereign coins like American Eagles, Canadian Maples, South African Krugerrands, or British Britannias. Buy standardized heavy cast bars from reputable mints. Ignore the sales pitches. Ignore the graded slabs of plastic unless you are a deeply educated numismatic hobbyist who is buying for the love of history, not for financial survival. Protect your capital by maximizing your weight and minimizing your premiums. As we navigate these treacherous waters, we encounter a mathematical blind spot so massive it borders on tragedy. It is the mistake of treating gold and silver as if they are the exact same asset, while completely ignoring the gold to silver ratio. If you do not know what this ratio is, you are walking through a financial minefield blindfolded. The gold to silver ratio is a simple calculation. It tells you exactly how many ounces of silver it takes to purchase a single ounce of gold at any given moment. Throughout modern history, this ratio has typically averaged around 60 to 1. When the ratio spikes to 80, 90, or even 100 to 1, it screams that silver is historically massively undervalued compared to gold. When it drops, silver is outperforming. Just a few weeks ago, in early May 2026, we saw a violent compression in this ratio, dropping from 62 down to 55 in a matter of days, following a brief geopolitical tariff truce between the East and West. Why is this critical for you to understand? Because gold is primarily a Tier 1 monetary asset. It is the anchor of the financial system, held by central banks to balance their ledgers. But silver? Silver has a dual personality that makes it the most explosive asset on the planet right now. Yes, it is a monetary metal with thousands of years of history as real money, but more importantly, it is the single most critical industrial metal of the modern technological age. We are currently sitting in the sixth consecutive year of a severe, structural, and undeniable global supply deficit for physical silver. Let that reality sink in for a moment. The human race is aggressively consuming far more silver than the global mining industry is capable of pulling out of the ground. You cannot manufacture an electric vehicle without silver. You cannot build a high-efficiency solar panel without silver. And most crucially, in 2026, you absolutely cannot power the massive, unprecedented electricity loads and cooling systems required by the exploding global infrastructure of artificial intelligence data centers without thousands of tons of physical silver. Every single attempt by the tech industry to engineer a cheaper substitute has failed, because nothing on the periodic table of elements conducts electricity and heat quite like silver. The demand curve is steepening vertically, while the supply is physically tapped out. The easy silver has already been mined. Discoveries of new high-grade silver veins have plummeted. If you are blindly buying gold without looking at the ratio, without realizing that silver is sitting on a geopolitical and industrial powder keg, you are leaving life-changing, generational wealth on the table. When the ratio is high, you trade your fiat for silver. When the ratio compresses heavily to historical lows, you can strategically trade your silver for gold. The ratio is your compass. Use it to navigate the cycles of wealth. This directly connects to an illusion born out of our modern addiction to convenience. It is the widespread dangerous belief that owning a precious metals exchange traded fund, an ETF, is the exact same thing as owning physical gold and silver. In the harsh, unforgiving reality of the financial world, there is an ancient rule that has never been broken. If you do not hold it, you do not own it. We are living through an era of profound institutional stress. We are witnessing the weaponization of the global banking system. We have seen sovereign reserves frozen overnight with the stroke of a pen. We have seen clearinghouses struggle under the weight of immense market volatility. When you purchase a share of a gold ETF, what do you actually possess? You possess a digital blip on a centralized brokerage screen. You own an unsecured, legally complex promise from a massive financial institution stating that they hold the metal backing your shares. By choosing the convenience of a digital ticker symbol over physical possession, you are introducing a lethal toxin into your financial life. That toxin is called counterparty risk. Counterparty risk means that your ultimate financial survival depends entirely on the solvency, the honesty, and the operational functionality of a third party. Read the prospectuses of these massive paper funds. Read the fine print about force majeure clauses, cash settlement provisions, and the deep layers of rehypothecation where multiple parties claim ownership of the exact same bar of gold. If the power grid suffers a catastrophic failure, if your brokerage arbitrarily freezes your account during a market panic, or if there is a systemic liquidity crisis that forces the exchanges to halt trading entirely, your digital gold is absolutely useless to you. You cannot hold it in your hand. You cannot barter with it to feed your family in a localized crisis. You cannot put it in a bag and cross a border with it. Gold and silver are meant to be the ultimate financial fire extinguishers, but an ETF is nothing more than a photograph of a fire extinguisher. When your house is actually burning down, a photograph will not put out the flames. Real wealth, sovereign wealth, requires real responsibility. You must take physical delivery. You must hold the metal in your own hands. Store in a heavy, bolted-down safe in your home, or utilize a highly reputable, fully allocated, segregated private vaulting facility that operates completely outside of the traditional banking apparatus. Remove the middlemen. Reclaim your sovereignty. Do not trade the absolute security of a tangible asset for the fleeting convenience of a digital promise that can be erased with a keystroke. There is one final trap that ensnares even intermediate and advanced investors, because it requires unlearning everything the traditional financial media has taught us over the last 40 years. It is the fatal mistake of misinterpreting macroeconomic data, specifically panicking when bond yields rise and selling your physical metals based on the empty noise of the Federal Reserve. Right now, the conventional textbook economists are confused. We are seeing the 30-year United States Treasury yield holding stubbornly above 5%. The traditional wisdom, the old playbook that Wall Street loves to parrot, dictates that gold pays absolutely no interest. Therefore, if the government is willing to pay you 5% to hold their debt, you should sell your non-yielding gold and buy those bonds. Based on this outdated logic, whenever a central banker steps up to a podium and delivers a tough-talking, hawkish speech about fighting inflation, or whenever yields spike by a few basis points, retail investors panic. They dump their metals, convinced that higher interest rates will crush the price of gold. But the world of 2026 has violently broken the old textbooks. You must look beneath the surface. Ask yourself, why are yields rising right now? Are they rising because the global economy is booming, because industrial growth is robust, and because the future is bright? Absolutely not. Yields are rising because global investors, sovereign wealth funds, and foreign governments are demanding massive compensation to hold Western debt. They are staring down the barrel of a $36 trillion debt load. They are looking at interest payments that are now consuming a catastrophic percentage of tax revenues, creating a debt spiral that cannot be mathematically solved through taxation alone. They are looking at an inflation crisis that simply refuses to die, driven by fractured supply chains and relentless energy shocks out of the Middle East. When investors look at this mathematical nightmare, they say, I do not trust this currency, and I do not trust this government's ability to pay me back in money that actually holds its purchasing power. There is a profound existential difference between higher bond yields that represent healthy economic expansion and higher bond yields that represent sheer terror and systemic credit risk. The bond market is currently sweating blood, and do you know who is emphatically not panicking? The central banks. While everyday retail investors allow themselves to be shaken out of their positions by a minor fluctuation in the bond market, the central banks of the world are quietly, relentlessly executing the largest transfer of wealth in recorded human history. They are devouring thousands of tons of physical gold every single quarter. Nations across the globe are aggressively dumping United States treasuries and repatriating their gold reserves. They are preparing for a multipolar world where the current fiat currency paradigm is forcibly reset. So, when the financial news networks blast alarming headlines and gold dips by $50 because of a press conference, do not panic. Do not surrender your position back to the very institutions that are trying to shake you out of the market. Watch what the central banks do. Completely ignore what they say. They are accumulating the ultimate debt-free Tier 1 asset. You must have the courage and the conviction to do exactly the same. We spend so much time dissecting numbers, analyzing basis points, and debating geopolitical chess moves. But when you strip all of that away, when you look at the raw truth of the matter, none of this is actually about money. It is about something far more precious. It is about your time. It is about your energy. It is about your freedom. Think about your life. When you wake up before dawn, when you work a grueling 50 or 60-hour week, you are making a profound sacrifice. You are trading the finite, unrecoverable moments of your life. Time you could have spent watching your children grow, time you could have spent building a dream, time you could have spent simply breathing in the beauty of this world in exchange for a unit of currency. That currency is supposed to act as a battery. It is a social contract. It is supposed to store the raw energy of your labor so that you can draw upon it in the future when you were tired, when you were old, or when you wish to pass your life's work on to the next generation. But the system we are chained to is fundamentally broken. The people holding the levers of power are endlessly printing trillions upon trillions of units of this currency, systematically diluting the battery, and silently stealing your time. Inflation is not a mysterious economic accident. It is a deliberate, hidden tax on the working class. It is the slow, agonizing confiscation of your life's energy. When you make the conscious decision to convert your fiat currency into physical gold and physical silver, you are committing an act of profound financial rebellion. You are opting out of a rigged casino. You are taking a tangible piece of your life's energy and locking it away in an indestructible element forged in the heart of dying stars billions of years ago. You are holding an asset that no corrupt politician can print, no central bank can manipulate into existence, and no algorithmic computer glitch can ever erase. You are buying a heavy, immovable anchor in the middle of a raging historic storm. But you have to do it correctly. If you let impatience drive you, if you ignore the historical data, if you allow the twin demons of fear and greed to steer your ship, this market will mercilessly break you. You will end up holding overpriced collector coins you can never sell for what you paid. You will hold empty paper promises that evaporate the moment the grid fails. You will panic and sell your true wealth right back to the bankers the moment the headlines get scary. I do not want that fate for you. I want you to be strong. I want you to be highly educated. I want you to look at the undeniable chaos of 2026, not with paralyzing terror, but with calm, quiet, unwavering preparation. You are the vanguard of your family's legacy. It is time to act like it. Do the deep research, respect the ratios, demand physical delivery, keep it secure and close to home, and completely tune out the daily, toxic noise of a dying financial system. This is the entire reason I do what I do. This is the reason Aurex exists. Because the mainstream financial apparatus will never tell you these truths. They will pat you on the head and tell you to keep your wealth locked inside their casino. They will look you in the eye and tell you that the crushing debt doesn't matter, that inflation is under control, and that everything is perfectly fine. It is not fine. But you and the people you love can be fine if you take the correct, disciplined steps today. Stay highly vigilant, stay deeply grounded in reality, and above all else, stay physical. I will see you all in the very next update. Take care of yourselves.